Good morning, everybody. This is Joe Cusick, VP of Wealth and Asset Management from MoneyBlock and TradingBlock.com with your Traders Exclusive for this first Friday of the February expiration cycle. Now, materials have led stocks in the market's rebound yesterday, and prior to that, beaten down energy stocks were fueling the rally and lifting equity prices. But today, we see that the market is pulling back. We have S&Ps right off its worst levels, but you also have to look at where the other areas of strength have been and leadership, and that's been in the defensive areas, which should have been a signal from the get-go that the bulls really don't have control right now. And you look at utilities and treasuries, and it's really difficult to get excited about a market where you have utilities and treasuries as the consistent leaders. As a matter of fact, when you look at areas like technology and consumer discretionary, you see that the performance has been horrible. As a matter of fact, you see how Google responded to their earnings. We also have Amazon that responded very negatively, and now you have LinkedIn today that responded extremely poorly, down almost 30%. Now, these were all on what would be, especially in Google's case, solid earnings announcements, and still the market's pulling back. So when you see high growth oriented stocks like Google that are struggling despite the excellent results that they have, you got to wonder why. And based on the rotation into these defensive sectors and the fact that growth is going to be a lot slower than what was expected, the stock market is looking at very few growth prospects. In the short term, what do you want to do? First of all, you want to cut your size down. Second of all, you want to look at the VIX. After the big January sell-off, the VIX has been soaring. Yesterday, when the market was rallying, the VIX still held up. It was up fractionally. Nerves are on edge at this juncture. If you start to see that the volatility index, the VIX, starts to get over that 23, 24, 25 level, that's where you're going to start to see that the fear in the market is going to start to escalate. That's where you also could start seeing the selling. What should you look for next week? Take a look at your holdings, your core portfolio. Look to write some calls against stocks that you own. If you don't own 100 shares, do call credit spreads. As a matter of fact, I'm doing a webinar on that next week. You can check it out on TradingBlock.com. And if you ever have any questions about any of this commentary or anything in the future, you can email me at invest@moneyblock.com. Invest@moneyblock.com. All right, folks. Well, this is Joe Cusick, Vice President of Wealth and Asset Management from MoneyBlock.com and TradingBlock.com. Wishing you a great weekend, great rest of the trading day, and we'll talk to you next week. Take care.